Hello, welcome back to Laptop Trader channel on YouTube at Laptop Trader. My name is Philip and I'll be hosting this quick presentation. My email contact is laptoptraderphil@gmail.com. To share this channel, use at Laptop Trader. This video is for information only and should not be considered investing advice. Caution, trade at your own risk. Please protect yourself at all times. Good luck. Educate yourself. Now invest in yourself, then invest in the markets, please. What does it mean to protect yourself at all times for our new traders and investors? I'll leave this here so you can read through that. All right, guys, real quick, I want to get to a quick topic about using some caution this week. I think we're at an inflection point in the market. I'll show you some evidence for that. Okay. Anyway, this is the SPY. This is a monthly chart of the SPY. Looks pretty good, right? We had this consolidation period. We had the sell-off in March. Then we had this reversal up. Looks like a nice move up there, which it was. Over 10.5% in April. Now in May, on a monthly chart basis, we just made a new high. So far up 2.62% in May. So nice looking chart, right, on a monthly chart. Well, I want to show you on the weekly chart why I think we're at this inflection point, or at a point where I would expect markets to kind of reverse course. And I'm not saying this is a crash or this is a recession or anything like that. I'm just giving you this information so that you can trade and invest with confidence and with some information to back up your decisions. Okay, so when we look at this move up from the end of March till now, we are up 1, 2, 3, 4, 5, 6, 7 weeks in a row from like this bottom point. So like this V bottom, this is very, very strong price action. We just made a new high last week in the SPY, up 0.21% for the week. So not a strong new high. I would call that a weak new high. So that's some evidence that, we're extended up. We made a weak new high. We're extended up from any moving average of your choice. And I would use some caution based on that information alone. I would use some caution with my positions and entering any new trades. Okay. Let's look at some other facts. Let's look at the Qs. Qs are also extended up 7 weeks in a row from a bottom. Weak new high last week. Even though it made a new high, it was actually down on a closing point, 0.32% for that week. So that is another little bit of evidence that markets are getting extended. When we look at the small cap index of the Russell 2000, this looks a little bit more negative, where we were up 7 weeks in a row, made a new high the week before last. And then last week, this market reversed course with a red engulfing candle, minus 2.31% for the week. So that would be a second bit of evidence that markets are going to probably correct a little bit this week. And then the diamonds, or the Dow Industrials ETF, up 3 weeks, sideways for 4 weeks, pretty much break even over this period of time, but this could go either way for the industrial stocks. Okay. When it comes to the volatility index, we're just slightly above normal, just at 18.92 for the week, slightly above, like that area where you really want it to be for growth, that 14, 15 area, slightly elevated on volatility. I believe this week it could spike up based on a few other economic factors, okay? But first, let's get to our main 11 sectors. Here's the energy sector. we had this green candle, red candle, reversal up, green candle, up 6.7% last week. So I have a few stocks in that sector that are doing very well. So energy is one bright spot. Financials look more and more like they could roll over again. Consumer discretionary looks like it could roll over, even though it had to move up. But it's been slightly down to sideways for the last 4 weeks, down 3% last week, so that's not a good sign for financials. Healthcare was slightly up last week, just over 1%, but in this lower range where it doesn't look very positive. Technology has been the leader of all the sectors, like I said, up 7 weeks in a row, week new high last week, and so that is due for some sort of pullback, correction, downturn, whatever you want to call it. Utility sector has been a fairly strong area for the last year or so. This was a bit of a warning candle back in March. I think we just got a few more warning candles for this sector. The previous week was down 3.93%. This past week down 1.9% for the overall utility sector. And I would call that a fairly strong warning if you have any stocks in that sector. Industrials have been sideways for the past, 5 weeks? Down last week 1%. So that could go either way when it comes to industrial stocks. Materials, a little bit more of a selling candle or a warning candle, minus 2.5% last week. That looks like that could continue lower. Now the communications sector has been sideways for about 5 weeks. That could go either way based on which way the market goes this week. And consumer staples. This is another bright area of the market, consumer staples. Defensive sector and similar to things like energy, healthcare, and utilities, even though utilities sold off. But defense money is definitely moving into a defensive area of the market. So another warning sign for stocks in general. Remember, most stocks will follow the market. So when these sectors are not doing too hot, they can be affected by a general market correction. In real estate, down 2.66% for this past week. I think that's another warning sign for the market and the economy in general. Now let's take a look at why I think we are at an inflection point. Let's take a look real quick at this chart of TLT, or 20-year Treasury bonds. Now bonds are a huge market. This has been an overall downtrend for quite some time, which isn't necessarily bad for stocks, but this last week it made another move down, 2.81% in bonds. Why is that important? That's important because that generally is the reverse of our friend interest rates and the cost of money. So the thing to follow with this is the 10-year Treasury note. This is what most of your loans, especially mortgage interest, is tied to. Symbol TNX. This is what I watch to kind of determine which way I think interest rates are going to go. In this last week, it was up 5.28%. Now this is a chart that you're not going to see a huge movement in when it comes to real numbers, but the percentages can matter. And so if this chart is up at now 4.59, up 5.28% for the week, that's going to eventually affect things like mortgage interest rates, car loan rates, general credit rates, credit cards for consumer borrowers, and for businesses that borrow money to survive. So this is an extremely important chart, in my opinion, and that is going to be, I believe, the catalyst for two things. One, the markets to sell off in the upcoming days to weeks, and two, for the news to start talking about inflation, which we all know is still there. It's always there. It's just a matter of how much. But I think this combination of interest rates, this market being extended up 6-7 weeks in a row, and the inflation, to talk about inflation, will most likely, or this is what I'm expecting, for markets to correct in some way over this next week and into June, May and June. So use caution. That's the message of this video. And if you get into a position, please, one, don't get overexposed to any position. Two, use a stop loss if you're going to trade individual stocks, okay? Here's an example of where I entered a stock, somewhere back here. This yellow line is my stop. That's the point where if it gets below that price, I was wrong and I get stopped out. Well, this stopped out here on this day back on May 8th. And since that time, the stock went down, 5 days in a row, almost made a new low. So it's important to follow your rules and take your stops. I just want to show you that it happens to everybody. Any trader will tell you take your stops. That's what I did here. It's just an example of one that it was a losing trade. That's what it is. So please, again, follow your rules, be smart, and I would use some caution this upcoming week and into the end of May. Let's end that video here, again, with a reminder to protect yourself at all times. And again, thank you for watching, sharing, and subscribing to the Laptop Trader channel on YouTube at Laptop Trader if you want to share this channel with anybody that is interested. Again, thanks for being a subscriber, and I hope this information helps you in your trading and in your investing. And I will see you guys in the first week of June. Good night.